Hello and welcome to another trading video recap for July 20th, 2015 for a daytradersjourney.com. Now, our first trade and only trade that I took today was around 7:20, 7:22 a.m. Pacific Standard Time. And you can see here in the morning we started to break down lower below the 5-minute opening range. And I had a first second entry based off this swing low here. You can see here from here we count the first entry here and then back up again to the second entry below the break of this bearish bar. And this trade did not reach first target. You can see it went down a little bit, then back up and started to move back up and become a losing trade. Now what you have to notice here is that everything was bearish in terms of the moving averages were bearish. Prices below yesterday's close, yesterday's high, below the opening 5-minute opening range. So everything pointed to this trade, which was a valid trade. It wasn't until the trade started going sideways here in this region where I started to draw this trend line upward, where I noticed that we're getting higher lows at the bottom here. So I was able to get out a little bit early based on this price action here and also the in-market internals, the NYCE tick, and the advanced decliners started to move up. So I was able to get out for a smaller loss than a full loss. But again, what you have to realize that not every trade is going to work out. So after you see this happen, what happens? We get full price action that's stronger to the bullish side, break up above the 5-minute opening range high, and so we start looking for buys. Because again, moving averages are bullish, which is 21 above the 50. Prices above yesterday's close. Prices above today's 5-minute opening range. So we start doing our count again for second entry longs. Here you can see that we didn't get a second entry here. We only got a first entry, and then it made a new high. So then at that point we have to start the count over again. And then we have first entry right about here, this candle. And then comes back down to this red arrow, red candle, then comes back and breaks above this green entry bar here. I have it circled here because these trades I did not take because I was already done for the day. I had to go somewhere, so I couldn't take these two trades, but I wanted to point them out as for examples. And this entry would be based on this high here of this candle because this signal bar here was bearish. You can see that the second entry would have been a break of this high of this bear bar, but again, I don't take long trades off bearish signal bars. I want it to be off bullish signal bars, so I have to wait for the entry bar to break to get a second long entry. So my entry would have been around 21.23. Stop would have been 21.21 area, and you would have reached first target for here. First target being 2 points. And here's another example here where you had a second entry. Same scenario where you have a swing high here, you count 1 first entry, 2 second entry, but again this is a bearish bar and a break above the bearish bar I don't enter. That's my own rule. So I waited till the break of the entry bar, which is this green bar, and the break of that would have been 21.24, and stop would have been 21.22 below the swing low, which is a good stop placement, and you would have reached the first target here as well at 21.26, which would have been 2 points. So that's it for today. Again, I only took one live trade today because I had to leave early, but again, you can see some examples of one losing trade and possible partial winners here and here for the E-mini S&P. So that's it for today. We'll do another recap for another day. Thank you.